Hello, everyone. Here's what happened last week. On Friday, we had a catalyst, but into Friday, we had a weak slide. A small dip, which they bought and they made a higher high, or are in the process of making a higher high, depends on what you look at, which is what we've been doing for, I believe this is the third month in. So nothing unusual happened. This past week, was the mirror image of the week before it, where the whole week was strong except for Friday. So what happened this Friday? Powell in Jackson Hole made a pretty strong statement, arguing that the Fed from now on is going to be focused more about the problems that might be coming from the economic conditions, like jobs problems, growth, GDP problems, and less dependent on data about inflation. So for the next few reports, if we see a hot inflation number, it shouldn't affect the market that much because they know that he will ignore it. Pretty bullish message. So now we have an even friendlier Fed opening the door for more upside of the bulls. Whatever they want to do now, they have a little bit more confidence. So let's see what they wanted to do last week. If you read the morning note on Monday last week, you saw this white box. I didn't move it. And that was the forecast from the options world. And we barely broke above the middle part. That's a little unusual in spite of the huge rally on Friday. Tomorrow morning, and I will add another box and keep this one so we can keep them in tandem. They busted through all of the short-term resistance that we had. And on the S&P, you can see how well they did compared to the all-time high. So the base case scenario remains what actually happened. If we do get a few red ticks, they're going to try to buy it to make a higher high. I wouldn't expect anything different until we see a change in behavior. We will report back as soon as we see that. I spoke about checking on follow-through. I want to check on the TLT follow-through because this one might be a tangible way where that says, okay, how many rate cuts are we getting? Or does the market believe the number of rate cuts we're getting? I also want to bring your attention to NVDA. It reports earnings this week. This is the largest company on the planet. It is the leader of all stocks, and therefore it will lead the markets up or down on Friday or this week. I expect an extremely strong report, just like it always does. Whether they like it or not, that we don't know. So how do I trade this environment? It's simple. The key term is trade. I wouldn't be investing full on new positions. I can ride my investments and balance my portfolio by selling covered calls if I'm able to do that. Buying puts is very expensive. Selling a call spread is not. And combining it by buying a put, it's what JP Morgan, how it balances. That's how it hedges. And also another easy way, which I've shared, is owning VIX calls. Believe it or not, even though the VIX fell below 15, is barely holding 14, owning calls in the VIX is the least painful, especially if you keep 30 to 60 days. And if we do have a spike of fear, you get all your money back really quickly. And it's the only insurance in my life that actually doesn't cost me a lot of money and can sometimes pay me some money back. If I do buy dips, it would have to be in good stocks that are falling for really weird reasons or into super solid support. And even then, I would make it a partial entry. I think valuation still matters, and that's why I'm shorting stocks that are super popular, like Palantir. At some point, somebody's going to say enough is enough. We cannot be pricing 150 years worth of sales in 1 year. So what's the potential this week? If we do materialize a breakout on the SPX, 6540 zone would be target number one. Almost 6600 would be target number two, versus a small dip to the middle of Friday's range in order to establish better footing. Saying the same thing through the SPY, this would be somewhere around 653, 654, the first step. But first, why not drop towards 641, for example, which was a number we were watching. Moving on to the QQQ, you can see the underperformance, the relative underperformance. Although they had a fantastic Friday, this long stick right there, they're still below the levels from the 19th. Therein lies the opportunity. Prior resistance can become forward breakout zones. So it too can reach 588 if it wants to, or 590 in the next few days, versus retracing a little bit down towards 566 and establish a better base. If for whatever reason, I have to mention it, we lose the support from last week, 558, 559, we will open another leg lower towards 552 or 51, where we have another consolidation zone down there. So we have support and backup support. For the IWM, I zoomed out to a weekly chart. because I wanted to show you how long ago we were at this zone and the speed with which we're attacking it. These are weekly candles. Every candle is 1 week. And you can see the all-time highs are just above us, and we failed here miserably twice before. You know what that means? You take that out, you will have an unbelievable breakout from there. So the breakout can be to 280-ish, give or take $5. You can see how the Dow actually did break out. There's no hints of fear anywhere out there, especially after knowing that the Fed is no longer fighting with the White House. So we do have a favorable Fed for Wall Street for now.